Start off with what we're seeing on the yuan, and how bad can it get really for the currency from here?
Well, we don't think that you'll get much worse from now. I think if you look at the recent PBOC fixing rates, they are fixed at a more resilient level compared to what participants are looking for. And that indicates that while the central bank is happy with some market movements following recent trends, but they also want to maintain some currency stability. And now having dollar CNY and dollar CNH above 7, we anticipate that there could be limited upside from here. And in fact, we just revised our forecast yesterday, but we still expect it at around 6.85 by the end of this quarter from 6.75 previously.
Okay. It's surprising, but do you think that that's predicated on the fact that in the second half of this year we will get better news on the data front from China?
Yes, I think the disappointing result that we saw for April, I think does shift focus to some potential stimulus by the authorities. So any positive developments on that front, I think could be positive for the yuan. And at the same time, I think it does take time for some of the disruptions that we've saw over the past few years, as well as in Q1, to be reversed. And I think we will likely see the economy gathering some momentum. Maybe not very strong momentum, but at least some momentum by the second half of the year. So that should be a positive for the CNY.
That curve actually says it all. Not this one in the previous chart. If you can just bring that slide up for our viewers. The previous one, it's a sharp move up for the Chinese yuan towards weakness, yeah.
But what if industrial production continues to disappoint because the demand function coming out of everywhere else around the world continues to be soft? Does that factor in? Because we can talk about consumption improving on a domestic basis in China, but is there going to be enough there to offset any kind of weakness elsewhere? And we're already seeing it playing out.
Yeah, I think that is one of the downside risks to our base case scenario, owing to the fact that we are still watching out very closely in terms of how the major economies are doing. I think so far, if we look at the PMIs and even the PMIs that's going to be expected that's going to be released next week, I think many of the PMI numbers for manufacturing and services continue to be in positive. But I think if there's any further slowdown in final demand, especially in the US, Eurozone, I think that could also weigh on the demand for China, and also with the sort of manufacturing not really rebounding as fast as markets have hoped. So that could be a downside risk to our scenario, base case scenario at this stage.